Everybody, and welcome to our first webinar of the year and the first of our Where to in 22 webinar series. I'm Terry Ryder, founder of Hotspotting, and today I'm speaking with the REIV's Buyers Agents of the Year for 2021 and author Miriam Sandkuhler on the topic of what next for Melbourne and Victorian real estate. Now, Melbourne's median house price rose 18% last year, according to CoreLogic figures, which was a commendable result in a year in which Melbourne was dubbed the most lockdown city in the world, but it underperformed a little relative to the national average rise of 24.5%. And that begs the question, what can Melbourne achieve in the coming year, free of lockdowns and with international borders reopening, bringing back the considerable impact of overseas migrants and foreign students? Regional Victoria has been a national leader on price growth for several years, including 24% growth for both houses and for units in 2021's. So where to in 2022 for these important markets? And to find the answers to these questions and a whole lot more, our special guest presenter today is multi-award-winning buyer's agent and best-selling author, Miriam Sandkuhler. Miriam, welcome.
Hi, Terry. Thank you. It's great to be here. Exciting way to start the year, even though we're in February. Good to be back on deck and presenting again.
Okay, well, over to you. If you'd like to share your screen and walk us through your presentation.
Fantastic. So everyone can see what's on the screen currently? Terry, is that correct?
Have you shared your screen since we started the broadcast?
Not since we started. I thought that it would continue as was, but that's fine. I can start it again. I can share it again.
I do have a, yep, okay.
That's fine. All good. Okay, so just let me know if you can see that.
Yes, I can.
Fantastic, that's great. Okay, so I'll go through the usual disclaimer. Today, I will not be providing any tailored financial, tax, legal or property advice, and strongly recommend you seek your own independent advice, including finance as well. So just note that we're talking generally today. A little bit about us. As Terry said, we are a multi-award winning property advocacy firm. We buy what I call high-performing investment grade properties that outperform the market. So it's about the right property with the right attributes at the right price to ensure our clients get the right result. And we also help clients sell their property as well through something called vendor advocacy. So it's really about helping them select the right agent, taking away the pain, protecting them from engaging the wrong agent, and making sure that they can sell at the right price with the right terms so they can seamlessly move on to the next chapter of their lives. And of course, saving them time and money and make sure they're not going to be manipulated into an outcome that they're not happy with. Because unfortunately, there are good, bad and ugly agents in the marketplace. And that's what the bad and ugly agents tend to do. A little bit about me very quickly. Terry's already mentioned I am a licensed real estate agent. I'm also an accredited property investment advisor, which means I have formal property investing qualifications I bring to the mix. Best-selling author, media commentator, as Terry mentioned, the REIV Buyers Agent of the Year last year. And unfortunately, I have been an expert witness against other buyer agents in my industry who unfortunately don't have experience or expertise and sometimes do the wrong thing by their clients and get them into trouble. So this is what we're going to talk about today. Just a bit of a recap on the market for 2021, the effects of immigration, where to buy from a metro and regional point of view and the types of properties to look for. And then, of course, those important buying considerations as part and parcel of it. So if we have a look at what went on for 2021, well, we had interest rates at historic lows and they're obviously likely to remain low for the foreseeable future. Demand was really good. The supply of properties for sale was constricted by the pandemic conditions. And of course, we had multiple lockdowns. As you've indicated, Terry, the median house price rose 18% in 2021. It wasn't as strong a result as other capital cities, but again, being the most locked down city in the world, that's part and parcel of why that was. Certainly all markets in Australia benefited from major government infrastructure and the underlying factors still favour Melbourne from a stronger for longer perspective. Employment remains strong, the economy is performing better than expected so far. And if we look at home buyers versus investors, home buyers were the driving force in 2021, but the number of investors in the market has been rising since June, and investors have been driving standout results in the regions, and we'll talk about that shortly. And the REIV May figures last year showed that the average days before properties in regional Victoria got sold hit 40 days, with the median going down to 35 days. And in instances, in my experience regionally at the moment, I'm sometimes doing deals within 24 hours of inspecting a property. Such is the demand and the heat in the market. So days on market has been the shortest it's been for outer Melbourne and regional Victoria for a decade. And the data gives us a good indication that more and more Victorians are making the move to outer Melbourne and the regional areas beyond the CBD. Certainly 5 towns recorded substantial decreases in days on market, slashing at least 60 days from the May 2020 figures. And the coastal tourist towns of Locksport in central Gippsland cut back by more than 100 days, excuse me, and another 21 towns have reduced days on market by at least 30 days, which is phenomenal. That's a massive shift in terms of days on market and the pace in which properties are selling. So this growth in demand has seen prices in regional Victoria hit a new landmark, and currently with what I'm seeing, there's no slowing down on that. Terry, did you want to interject?
Sure. Everything you say is true. I think there's a lot of media talk about market slowdown, the boom is over, interest rates will rise, prices will fall, etc., etc. But the data shows that none of that's happening, that markets have started 2022 as strong as they were in 2021, in some cases stronger. We're seeing markets around the country producing extraordinary uplift in a single month and in the most recent quarter. And we also have seen the last 2 weekends, the auction clearance rates for all the major cities of Australia have been much stronger than the pundits expected, not stronger than I expected, but certainly those that are talking down the prospects of the markets being strong this year were surprised just how strongly auction markets have started 2022, given that there's been quite a considerable rise in the number of properties being put to auction, yet the clearance rates have remained very, very strong throughout the major cities of Australia. So I think we're gearing up for another very, very strong year in 2022, but I do think it's a year in which investors need to be a little bit more selective and careful and better researched. I think people are throwing money at locations that in the long term aren't going to perform for them, and they really do need to take on board, good quality advice from qualified professionals and make good choices this year.
Yeah, absolutely. And FOMO was driving a lot of that, and I'm going to talk to that shortly. So we talk about immigration. Well, we're looking at a resumption of immigration. Australia's immigration plummeted over 2020 and 2021, and during the pandemic, just 35,000 people immigrated, whereas previously we had a range of 200 to 250,000 per annum. There are signs that immigration will rebound in 2022. We've already had student and skilled visa holders resume their immigration into the country. And of course, now they're opening up access to tourists to come in as well, which obviously isn't immigration, but it's a good economic stimulus. It's unlikely to get to its previous high levels of previous years. That's obviously going to take a bit of a time to get there. And there's always a lag between hiring immigration and the impact on demand of property, but we do expect to see the impact of new arrivals to be felt in 2022, but at a lesser rate than before the pandemic. So sometimes migration tends to affect sale prices at a 2 to 3 year lag, and we haven't seen that flow through to the market yet. But when it picks up, that lag will be the same. It tends to affect rental demand straight away. Obviously, when the pandemic hit, there are a whole lot of apartments and properties that just suddenly lost tenants. A lot of those properties have been sold, and now as immigration starts again, there's going to be demand. And the migration plunge, as I said, impacted those inner city high-rise units the most. And some townhouse and rental units in the western suburbs and some locations in the northern suburbs were affected also. So let's have a look at where to buy in Melbourne Metro. Well, your best prospects are going to be your middle ring suburbs, your 3-bedroom family homes on decent blocks of at least 500 square metres or more, which cater to work from home. So most people are looking for minimum 3 beds, or they're looking for 3-bed and a study, or they're looking for 4 beds with that 4th bedroom to use as a study. And of course, having a decent enough block of land to be able to get out of the house and not feel locked in and trapped. The locations likely to perform the best are going to be 25 kilometres or less on the east and southeast of Melbourne, or under 10 kilometres from the CBD on the north and the western sides. So if we look at those inner suburbs under that 10 kilometre range, we're looking at 2-bedroom cottages and very select 1 and 2 bedroom units or villas in high residential amenity locations. So I'm not talking about apartments, I'm talking about villa units, possibly even townhouses. From an affordability point of view, that's a key criterion, that price bracket where investors and home buyers meet, which is currently between $650,000 and $1 million is key. So that's where we're finding most of the competition has been over the last couple of years, because you've got those two parties literally competing with each other for the same stock, and that's contributed to those price points escalating quite rapidly. If you're going to look at a unit or a villa, you want to, or possibly even an apartment, so long as it's a 20th century 2-bedroom apartment with a balcony or an outdoor space and a car space and good amenity in the inner middle suburbs, they're likely to do well as well. So it's imperative to never buy an apartment that doesn't at least have some sort of balcony or courtyard. They're the ones that have suffered first when it's come to people vacating them and renting elsewhere or going home. And they're the ones that are going to struggle to rent last, again, because of the fact that they just don't have those basic amenities. Townhouses in inner middle suburbs as well. Again, those which have got good outdoor space, low maintenance and close to transport, they look like they're positioned to do well. So take those into consideration. And by all means, avoid high density units, apartment blocks built generally within the last 10 years. We know that there have been a number of issues with combustible cladding, and for many properties, those dramas and issues are still going on with all sorts of lawsuits and local councils requiring upgrades. B-grade houses and homes in the outer suburbs, what I'm seeing at the moment is there's always demand for what we call an A-grade property, but the B and the C-grade properties are really lagging and struggling to sell, particularly now that there is a supply of more of those properties coming to the market. And the reason there's a supply of these B and C grade properties is because in Victoria, the Residential Tenancies Act was upgraded in 2020. It's now effectively in force as at the 21st of March. And what that has meant is that landlords now, even if they've got a property that's 10 or 20 years old, they are now required to meet a set of minimum rental standards. There are 14 of them. Feel free to contact us at the end of the webinar, and we're happy to send you a free stakeholder kit of what those rental reforms are, but they're now in play. So landlords that have got properties that are perfectly habitable now have to meet compliance requirements that didn't exist a couple of years ago, and now they do. So an example of that would be a property that has, say, a gas stovetop above the oven. Then you have an exhaust fan. There has to be a minimum clearance, and if that property doesn't have that clearance, then the landlord has to go out and make sure they can get someone to come in, adjust the height of the cabinet, reinstall the exhaust fan, and make sure they get that clearance for it to be deemed compliant and get certification around that. Now, personally, I did that to a property a few years ago. It cost me $800, which was a lot at the time. Now, for the same sort of work to be done, it's $2,000. The reason is we have trades that are in high demand and low supply. We're talking about fiddly jobs that most carpenters don't want to do. And so what they're all doing is they're loading up a premium. Now, as a result of that, as I said, even with a perfectly good property that's 10 or 20 years, if it doesn't have that level of compliance, there are landlords looking at incurring tens of thousands of dollars worth of cost to keep that property compliant, to ensure that it legally can be rented. And property managers will be fined if they're managing properties that aren't legally compliant. So they're not going to help you if you're not going to help yourself. And that's actually resulting in a lot of property coming to the market. So there has been a supply of property coming in. The poor quality ones have been absolutely not maintained for decades. It would be insane for an investor to buy that sort of property, but those properties have been selling to home buyers because they don't need to worry about those compliance issues like a landlord does. And so just be aware that that's why there are certain caliber of stock coming in that you might look at and not find it very appealing, but those are the reasons why. As a result of this stock coming in, it's coming out of the rental pool, and that means we're having a bit of a rental crisis at the moment. It's just the tip of the iceberg, as more and more landlords find that they can't pay for these changes to their properties. They're going to keep dumping stock, and eventually yields and rents will increase significantly. So that's just a matter of time until that happens. But again, bear in mind your A, B, C grade property, but that will be one of the reasons you're seeing a lot of not so great properties being dumped onto the market. So,
Miriam, those rental requirements sound quite onerous in some respects.
Yeah. Well, so in some instances, it's as much as having a deadlock on a back door. But if you've got back door that are glass bifolds and it can be locked, but it can't have a deadlock put on it, technically you don't meet the criteria of the legislation. So some of it's ridiculous. Unfortunately, government, of course, went off and did this without consulting the REIV and without consulting property managers from a practical point of view. And I understand they're protecting people from slum landlords, and those people do exist where they charge ridiculous amounts of money in houses that are dangerous, but they're a very, very small minority. So as I said, someone who's got a property that is absolutely habitable, but it doesn't have a window lock on and you can't retrofit a window lock, and the only way to do it is to change the window. Or you can't retrofit a deadlock on glass bifold doors and you have to change the doors to do that. No one's going to fork out $10,000, $20,000, $30,000 to meet the legislation. And that's where, you know, it's going to actually end up quite disastrous. Where the intention was to protect tenants, it's going to result in a heck of a lot less rental stock being in the market. And the government's going to have to pretty well get their act together and get a whole lot more social housing happening instead, because that's the supply or the pool that landlords were fulfilling.
Well, we already have a rental shortage crisis in this country, and that's come about over the last 4 to 5 years of decisions by state and federal governments, APRA, and other authorities making decisions that are onerous to investors, discouraging investment. And this just seems to be the latest in a series that is going to diminish the rental pool.
Yeah, and there's a perception that every landlord is rich, and that's actually not true. You know, I work with clients who've got budgets as low as $450,000. They've got very little super. They've got no chance of getting a pension. They need something to supplement retirement in older age. Their best opportunity is a property. And certainly when we look at properties, we assess those minimum standards. And there are times where we'll walk away from a property. You know, I've come across properties that are absolutely ideal, but this clearance issue, when you've got an exhaust fan in the chimney and there's a whole lot of construction and renovation that has to be done to deal with it, you know, we just walk away, and the average person isn't going to know and understand that. So yeah, absolutely, the crisis will continue. It's been created by governments who don't consult with industry, and they've taken it to an extreme, you know, they've taken it to an extreme. So watch this space. I think what we're dealing with now is the tip of the iceberg to come. And it's really unfortunate because the legislation was intended to protect those most vulnerable, but unfortunately it's going to hurt those that are most vulnerable, because the cost of affordable housing as a result of this expenditure, and I speak to landlords all the time, and myself included, you know, sometimes properties are quite a few $1,000s out of pocket, and that obviously has to be cash flowed, and at some point in time that's likely to be passed on to a tenant. But in the, you know, short term, that stock will hit the market. In the more medium term, people will be looking to buy properties that don't have issues that they have to manage. And in the meantime, costs of rents will go up. Okay, so best bets for 2022, Melbourne suburbs where you should find some good long-term prospects. So if you're an investor or an ambitious home buyer, finding the right property in 2022 is about selecting a location with good fundamentals, which offers bang for buck. So my best bet is that around the median price point for Melbourne, as the more expensive suburbs and the bottom of the market will likely underperform if interest rates start climbing. So this is some research that we did in various price points to give people an indication of what they can get in terms of bang for buck. The common traits with these suburbs are good transport, local shopping and affordability compared to neighbouring suburbs. And it's about sort of looking at it from a tactical long-term growth fundamental perspective. Of course, we always look at macro and microeconomic indicators, but these particular suburbs are coming up as a good price compared to some of the neighbouring suburbs. Public transport's looking good. And if you've got the properties that have got the right attributes, they're the ones that you'll best be able to meet the market. And ideally, they should rise in due course. So for units, they're relatively affordable compared to houses in high amenity areas. Houses, once upon a time, there was a 30% differential in terms of price between units and houses. And now it's almost 100%. difference in terms of price between a unit and house. Just remember that an ordinary cheap property in a good location is still a bad choice. So it's got to be the right location, but it still has to be the property with the right attributes. And a bad property or a property at a discount that's a bad property in the right location is still a bad property and a bad purchase. Okay, so moving on regionally. So regional Victoria has been a national leader on price growth for several years, including 24% growth for both houses and units in 2021. Regional house prices have performed well across Australia, and some of this has been driven by tree changes and the work from home phenomenon. Live in the bush, you know, work from home, work by Zoom, and not necessarily having to commute regularly. But the biggest driving force has been investors, and this is what's created a significant jump between metro and regions as well. Well, I'm starting to see a little bit of interest tail off in the smaller centres. It's not as hot as it was late last year, and I'm also seeing a number of agents overquote to get listings, putting properties on at ridiculous prices, eventually having to talk the vendor down and then selling it several weeks after it was listed in the first place. So it's really important to understand, do your research in terms of regional pricing, because there is a bit of that going on. And there are vendors that are also being greedy, you know, they've possibly missed the mark a little bit compared to what it was like last year, and they just need to be re-educated by the market. But certainly buyer interest remains strong in the Geelong, Ballarat, Mornington, Peninsula and Surf Coast areas. So buying metro is different to buying regionally. In terms of regional Victoria, there are different considerations to take into account in a regional market than what you would a metro market. Again, what I was saying about the Residential Tenancy Act, this applies here. So if you're going for older properties in regional areas, make sure you're not going to come unstuck with that criteria. Economic conditions will underpin the region and the market. So as you said, Terry, there are people who've just bought anything anywhere in a regional area, paid a premium, but they're probably going to find it will struggle to get capital growth moving forward. They might struggle to rent it and they might struggle to resell it, because if it doesn't have those strong growth drivers within vicinity to that property, well, then they're the things that usually determine if it's an A or a C grade property. So you want to be looking at very much a long-term approach, definitely not flavour of the month and not FOMO. You want to find properties in locations with multiple growth drivers. You want a minimum population base of 80,000 people in a town centre. And that goes to your comment, Terry, about, you know, people who've just bought anything anywhere in tiny little towns that don't have employment opportunities and don't have good public transport and don't have good local amenity. They're the properties that are going to come off the boil first. Stock on market and days on market are important to look at. Obviously, if days on market are getting shorter, as we spoke about earlier, then that's a sign that there's a strength in the market. You do want to look at the environment. You know, we really are in Australia having to deal with issues, significant issues around flooding, fire and drought. There are regional areas that are in fire zones, they're in flood zones. So make sure you're looking at contracts carefully and just check on your insurance as to whether or not your insurer will cover you if you buy in that particular location. Because I do know there are areas, some in Queensland in particular, where due to flood and sometimes due to fire as well, you can't get insurance in the suburb that you're buying in. I don't doubt that that's potentially an issue around the country, but just make sure as part of your due diligence, you're taking that into consideration. Employment opportunities, as I said, have a look at the employment levels in town. Access to Melbourne is important, whether it's by road or train or both. So if you're buying regionally, you really don't want to be more than an hour and a quarter away from Melbourne. From a commute perspective, an hour and a half at the absolute most. Once you get beyond that, you know, it means someone's doing more than a 3-hour round trip if they have to go to work in the car. Alternatively, if it's an hour trip by train each way, well, that's fine. You can sit on the train and pull out your laptop and do some work while you're actually commuting. So that's a good option. And then we come down to the house age, your demographics, so household age, income, occupancy type, structure, who's going to rent it, who's your tenant. what are the local amenities and infrastructure that your tenants are going to demand. For example, if you're looking in regional areas where you have extremes of heat and cold in summer and winter, then absolutely you have to have houses with central heating. Absolutely you have to have houses with air conditioning. So if you're not going to buy properties with that, you're going to have to install it later, or you're just not going to get a tenant. That's the commercial reality of it. So again, having a really good insight into the area that you're buying in will make the difference between making a good buying decision versus making a mistake. And then, of course, you want to look at the land supply in the fringe suburbs. A lot of these regional areas do have vast tracts of land that can be subdivided and sold. And obviously, there have been government incentives that came about last year and the year before in terms of people buying new versus buying established, stamp duty savings, first home buyer incentives, all that sort of stuff. Obviously now we've got issues with construction. The construction industry is struggling with trades, prices having escalated, materials having gone through the roof, and now there are all sorts of delays going on with new build properties. So just be wary of that, because that's a consideration. And from an oversupply perspective, make sure where you're buying into a suburb, have a look at the amount of land surrounding that particular suburb. If they can continue to just continually bring land into the market, you're going to struggle with supply demand issues, because there'll be a constant supply, that demand will be met, and you're going to struggle potentially from a capital growth perspective as well. So I usually say to people, if you're buying a home, you still want to make sure it's an A-grade property, because you actually want it to grow in value for it, because you may require, use that capital growth to upgrade. You may use that capital growth to leverage from and invest. So don't underestimate the importance of buying an A-grade home as well for those reasons. So look dispassionately at the underlying factors that shape a regional market. Keep the emotion out of it. But as I said, look at your supply and demand equation, population growth, employment opportunities, industry development, what's happening with tourism and manufacturing, and infrastructure as well. If it's a pretty town and that's what induces you to buy there, well, that's probably going to be an emotional decision and a bad one. So make sure it's not emotional and it's a data-driven decision in terms of where you're going to buy regionally.
There's a lot of work for people to do there, and I agree with you. They really do need to do that level of research to make sure they're making good choices. Do you think the average punter actually knows where to go to get the information they need, or are they basically media driven in their perceptions of good places to buy?
Yeah, I think there's a lot of media driven activity, but we know the media contradicts itself all the time because they've got to get headlines. I mean, Hotspotting's got fantastic regional reports. They're really, really useful from the point of view of understanding the demographic, the infrastructure, and what's going on, median price points, growth from year to year. So certainly Hotspotting's got great reports. But it's now in the market that you're in, it's not just understanding the market. You've then got to drill down and know each suburb really intimately, because there are pockets of suburbs to buy in and there are pockets of suburbs not to buy in. And if you don't know which pocket that is, you might think you're getting a bargain, but then you find out too late that, yeah, it was cheap, but you've bought in the commission area of the suburb in the worst possible pocket and you can't get a tenant, or you've got a tenant you don't particularly want to get, and therein lies the mistake. So cheap doesn't mean good. That's where paying for expertise can stop you, A, making a mistake worth hundreds of thousands of dollars, and then B, hopefully you'll get an advocate, or a good advocate who knows what they're doing, not a fake buyer's agent, which I'll talk about. But yeah, having the research and the data to start with is imperative. Having an intimate understanding of the suburbs and the areas within that regional area, and then even just having the ability to get access to the property to inspect it and deal on it in a really short space of time. Sometimes I get a few hours notice of a property that's coming up that I know meets my brief, and I have to try and get, colleagues in there same day, next morning, to try and take it off the market and do a deal. So that can be the difference between buying and missing out constantly. And if you're missing out constantly in a rising market, well, it's going to cost you more missing out than maybe engaging an expert in the end anyway.
Miriam, there's a lot for people to do, a lot for people to check. Because we want people to buy safely, therefore do their due diligence. But you also mentioned that you're doing deals within 24 hours. How do people function in a market like that? Buy well, buy safely, but not get left behind by the competition in a frenetic market?
Yeah, well, I guess what I'm seeing is I see people taking massive risks. So I actually come up against people who will, out of FOMO, put offers in on properties with no conditions whatsoever, cash, no building and pest inspections, nothing. And that's unbelievably dangerous. And they do it because they don't want to miss out, and the market is driving them, or the agent's pressuring them to make an offer. Now, there are ways and tricks around how you can put an offer in while being flexible with that criteria, but still covering your butt. That's where engaging someone like me can help you with that. But it just comes down to a commercial decision. You either take a massive gamble, and no one ever talks about the mistakes they make. You know, no one ever brags about, oh, I bought this property and I had no due diligence on it, and shoot, I've found out now that there's, you know, termites in the walls and it's a $100,000 problem and we're not covered by insurance and we've made the worst mistake of our life. People don't talk about that. They don't disclose it. They don't volunteer it. It's not barbecue chit chat. No one wants to be embarrassed about it. Everyone only talks about their wins. But there are properties I reject constantly that I then see people buy, or unfortunately sometimes I see other buyer agents buy, because they have more of a transactional churn mentality than, you know, what I would consider an appropriate or professional approach to it. And then you're just buying a problem.
Yeah, I think it all amounts to a great argument to have a very good advocate on your team. I think it's just so important in this market now more than ever before, because the markets are so competitive, because there are so many investors making bad decisions because they're not willing to perhaps spend the money on good advice. And I think it's really important that people get over that mental hump. And consider that it's the worst kind of false economy not to invest a little bit in good advice before making a very big purchase decision.
Yeah, and I've had people come to me where they've bought a property, and one gentleman in particular bought regionally, bought quite cheaply in that bad area, and then learnt too late that he'd made a mistake and then reached out to me afterwards. So, you know, you have to think of it as an investment in an expert to make sure, as I said, you're not going to make a $400, $500, $600 million, $2 million mistake. Number one. That's what you're engaging someone for. And then it's about the right property with the right attributes, and that'll result in capital growth and the results that you'll get in years to come. And I'll you know, share some examples on that. Okay, so regional. Well, this is some research that I got that was talking about the median house price changes over a 5-year period ending May 25. And out of a list of 100 suburbs, we can see that Ballarat and Victoria had a 67% change. Geelong was number 16, that came in at 62. And Bendigo was number 46, that came in at 48. So this was a national survey, but again, it comes down to growth drivers, multiple growth drivers, as I've said. Property selection is critical. Look at those attributes that the property offers. And as we were saying, smaller towns will see their recent outperformance start to flatten because they don't have those multiple growth drivers there. So again, what to consider when you're buying regionally. So, you know, you've got to look at the property price versus the town that you're looking in and the region median price point. You want to look at price growth over 3 to 5, 10 years. By all means, you have to be aware of the condition of the property. And as I said, those 14 minimum rental standards. What's the supply and demand like for similar property types? What's the rental appeal of the property? What are the days on market of that type of property in the suburb? What are the growth drivers for sustainable future growth? Are there any development applications in and around the vicinity of what you're looking at? Obviously, you want to factor in, you know, is it town water? Is it are you dealing with tank water? What's the sewerage like? Access to gas and power? Are you buying in an area where you've got off-grid costs and none of that's connected? And what are the implications and costs of that? And how's that going to affect you from a resale point of view? Quality and the condition of the property, as I said, is it A, B or C grade? A grade will always have competition even in a down market, but your B and C grades will linger. And this is where they'll sit around and take a while to sell, or you're going to have to drop price to get activity. So once you've selected a town or region, it's important to understand the local dynamics. So your access to your shops, schools, transport to Melbourne, sales price performance of different locations and suburbs, rental demand in different locations, and the type of tenant requirements. So as I said before, heating and cooling, storage is really important, town water versus tank water, Is it on the right side of town? Is it on the wrong side of town? Is it on the right part of the suburb or the wrong part of the suburb? And then consider the attributes. Many of these are the same as Metro. We assess 57 attributes when we look at a property, but there are other things to consider in regional towns, most of which are environmental factors. And ironically, climate is now something that people are starting to look at it and consider, because we're dealing with extremes of climate. Possibly why Hobart's been as attractive as it is with climate change and temperatures getting hotter. I think you can't go any further south than Hobart, so maybe the heat won't catch up with them for a long time yet, but absolutely they're things you need to take into consideration. It's the difference between a good decision that's going to grow in value or a bad decision where you've made a mistake and you won't get the returns that you're looking for. Okay, so just some case studies. So this is an example of some clients where we bought them a home, but we bought them an investment grade home, an A grade home. So we helped them buy that in November 2020 for $1,226,000. We competed for that property at auction. As at January this year, that's meant to say January 22, it's grown by 21% in 14 months to $1,480,000. So they've roughly now got $245,000 to now invest in an investment property. So that's what I was saying before. Make sure when you're buying a home that you always treat it as your biggest asset, your biggest investment, and you want to make sure it's going to maximise that capital growth for those purposes that I described. Buying regionally, again, often a harder market to come to terms with, but you also have to be careful. Beware of overpaying for property because you're comparing regional prices to metro prices. That's the best way to overpay for property. And there are fake buyer agents out there as well, which I've talked about in the past and I'll mention a little bit further. But this is where people get it wrong. So I know for a fact this was a metro buyer's agent that wasn't experienced regionally. This property was quoted 355 to 370 in March last year. No day of the week would you pay more than $425 for it. And this person lost control, got highly competitive and ended up paying $557 for it, which is absolutely insane. That property will take years in terms of the rest of the market catching up to that purchase price. If they sold it tomorrow, they'd lose $100,000 easily overnight. Because late last year, I bought a similar property that was actually superior to this around the corner and paid $427,000 for it. So again, a cheap advocate doesn't mean you're getting a good advocate. If you're dealing with metro advocates that don't have significant, and I mean years of significant experience in a regional market, be very careful because these are the sort of mistakes that they can make. Conversely, a good scenario. So this is a client where we bought 5 properties for her. This one we bought regionally September 2017 for $420. As at January, it's worth $670. So 60% capital growth in just over 4 years. So about 14% capital growth per annum. And again, this is obviously before COVID and before the lack of affordability really was driving people very heavily to the regions. At the time, we were able to buy it for a 5% yield. I think we got a $7,000 rebate at settlement because there were issues, and I was able to negotiate that back to the client. So it meant that those repairs were effectively paid for by the time she settled. And that's the difference between an advocate who knows and understands regional areas, as well as knowing how to select and ascertain an A-grade property. And a good advocate will draw a line in the sand as to what not to pay, because all you're doing is driving up prices in a market where the property is not worth it. And in the case of that other case study, honestly, I would doubt that that bank valuation was stacked up. It's quite possible that that purchaser may have had to find $100,000 worth of equity to tip in the difference. And that sort of stuff will get advocates sued. And I mentioned before I was an expert witness, and these are the sort of things that I'm seeing happening if you're working with the wrong person. Okay, so question time.
Yes, and please, people, if you've got comments or questions, please type them into the chat box or the Q&A panel, and we'll do our best to answer as many questions as we can in the time that's available. We already have a few that's up there. Raymond's asking,
I'll go back, sorry.
Do you consider the Morning Peninsula locations such as Rosebud Regional Metro? I'm not sure that it matters really. What does matter is that market has been attracting extraordinary demand, and the price growth in the Mornington Peninsula, I would suggest that it's probably in the top 3 locations in Australia in terms of the level of price growth across the board that we've seen in the last 1 to 2 years. Extraordinary performance. But regional metro, Miriam, what do you think?
Yeah, that's a tricky one. Once upon a time, you would have considered it regional, but now with the freeway link and all the rest of it, you know, you're sort of an hour from the city. Look, I don't think it really matters either. It's about knowing what to buy. Is it an A-grade property? You know, doing all the due diligence. Honestly, I don't really have an opinion either way on that one. I think that's just a technicality that's not overly important.
Yeah, I don't think it really does matter. It's been a wonderfully performing market. It's still, in your experience, Miriam, attracting strong demand.
Absolutely. In fact, I just did some vendor advocacy for a client in Sorrento. The neighbouring property sold a few weeks earlier at 2,650 million. We took her property to market, and straight up before we ran the campaign, she got an offer of 2,725, so $75,000, like that. High demand, low supply. She had a very unique property that had appeal to people who were downsizers. She was an older lady, a downsizer herself, and it was just the right property in a gated little community that was lock up and leave, that was a really generous 3-bedroom small house with a swimming pool, had the whole lifestyle thing going on. And the buyer was an older couple who'd lived in Rye for 30 odd years. And they bought that property to A, stay in the area, B, to downsize. And they were selling their property of very similar value to settle on this one. So they bought this first. They've now put their property on the market. They're going to cash in some shares, and they're downsizing accordingly. So yeah, absolutely, very high demand, low supply. And one of those biggest challenges has always been competing against your cashed up downsizers, particularly if you're an investor or a first home buyer and you're coming into the market with debt. It's always hard to compete with downsizers when, you know, they've got decades worth of capital growth to you know, bid with.
Okay. Erin is saying a buyer's advocate has suggested I purchase some beverage, and beverage, if I remember correctly, is in Mitchellshire, a little bit north of Melbourne, one of those growth towns just beyond the Melbourne metropolitan area. He's saying, based on your advice, this is perhaps not the best move. What do you think?
No, I personally wouldn't. It's in the middle of nowhere. You know, if you've got enormous amounts of land, obviously being subdivided around it, that's what's going to dampen your capital growth. You've got lots of housing estates being built out there. You know, for all the reasons I said before in growth drivers, I identified, you know, you want to be in the northern or western suburbs for units within that 10 kilometres or within 25 kilometres of CBD. As soon as you start getting out to those areas, I'm guessing that your budget might be an issue, and that's the only place that they can figure out to recommend you buy, because they don't know regional areas and they don't have that as an option or a solution for clients from an investment point of view. So just understand that if you have a lower budget, you're usually better. For clients that have got sort of often 400,000 to 600,000, I buy regionally for them because they're going to get much better bang for buck. But if you're dealing with advocates who are fake advocates or new to the industry or don't necessarily know what they're doing, and I'm bringing up a slide now, then sometimes that's a solution they recommend because they don't have any other solution. They just go based on a price point and here you go, this will do. They've got to have data and not sales agent data, but they've got to have data to support it. But it still has to be based on multiple growth drivers. So it can't just be on population growth. It has to be on population growth. It has to be on infrastructure development. It has to be on employment opportunities. Because I've seen lots of those outskirts suburbs and newer areas have significant population growth and significant short-term price increase, but they've had significant high unemployment levels. They've had significant shortages in schools being able to accommodate and cope with the massive influx of people.
And significant vacancy rates very often as well.
Yes, I mean, vacancy rates, because people can buy a property and pay the same on their mortgage as the rent that you're asking them to. So my advice is stay away. Yeah,
I think people are misled by population growth. There are some people out there that have this population growth theory that actually you should always target the highest population growth areas, but Often all it means is these are the areas that have got the land available for new house and land packages. It doesn't mean they're the best places to buy. There's just an availability of land, so that they might show up very prominently in the HIA publishes a hotspots report, which is based on the number of building approvals and population growth, but it's really highlighting the new growth areas, not necessarily the best ones to buy.
Yeah, and looking at one growth driver in isolation is where you're going to make mistakes, and not understanding that these can be short-term gains rather than the longer term. And that's where I spoke before about look at the 3, 5, 10 years. But as soon as I hear about these outer areas with tracts of land that will just keep being released, straight away you're not going to get capital growth. If you're lucky, you won't lose money. But as I said, when you've got interest rates so low where someone can buy a property and their mortgage repayments might be less than the rent that you want for that property, I've seen people lose money on that for that exact reason. So not a great strategy. Which brings me to the caliber of your buyer's agent. The term buyer's agent and buyer's advocate is being misused and abused. There are double agents out there. I've had people come to me where they're working with a buyer's agent, but they're not charging them, but they're trying to put them in a house and land package. So just be aware of that. Fake buyer agents have got no real estate experience, run a mile. They've done a 5-week online course and they really don't know what they're doing. Make sure they're licensed in the state that you're in. Ask that if they're a member of Real Estate Buyers Agents Association, because we have code of conduct and very high standards in terms of how we need to operate if we're a member. Ask for experience. You want proven track records, case studies, Google reviews. But you want to also make sure that they've got investment qualifications if they're giving you investment advice. In this industry, unfortunately, unlike financial planning, you have to have investment qualifications to be a financial planner. The horrific factor is in real estate, you do not have to have any investment qualifications whatsoever to be a property investment advisor, which is scary. And people make unbelievably poor decisions as a result of getting free advice, which is actually sales advice, not property advice. And that's where they're buying poor quality assets like house and land packages and off the plan and all sorts of stuff. So if you want to learn a little bit more about it, click onto my website. There's a blog which is called The Rise of Fake Buyer Agents, what you need to know. There are 13 questions to ask when researching a buyer's agent, so make sure you click on that. And Erin, I think maybe have a look at that and then go back to your buyer's agent that you're working with and double check some of those questions.
Okay, now Miriam, we've just touched on the population growth myth that can be very misleading for people, and Sonny is asking if population isn't necessarily the best growth factor, what are the best growth factors for people to? And I think you've already actually covered that quite extensively earlier in the presentation with your references to the importance of the local economy, infrastructure spending, economic growth, diversity of economy, etc.
Yeah, employment opportunity, industry growth, is manufacturing. Like, so for example, there are businesses that used to be based in Melbourne that have moved to large regional centres because of the affordability, the lifestyle, the amenity. They've taken employees with them and it's been cheaper and more effective to run business from those locations. So decentralising outside of Melbourne, look at the industries and the businesses that have done that in the regional areas as well. So actually I've written about this sort of stuff in my book, so I'll refer to that shortly.
Okay. Normie's asking a question with reference to, I think, some of the comments you made about that you often find the best A-grade properties in those inner or middle ring suburbs. But what about, he's asking, what about those people who can't afford those areas? In the outer suburbs of Melbourne, is there value for investors to be found with good credentials to capital growth, or should they avoid that and go to the regions?
Well, again, if you've got 400 to 600, you're going to get better bang for buck in a region any day of the week than you are metro, because with that kind of budget, depending on where you're buying, what you're doing is you're weighing up, do I go significantly further out, 50 kilometres on the fringe of Melbourne and buy a house and land package for 600,000 and it gets me a house, but it's not about the land size, it's about the land value. So a fundamental driver of capital growth is land value, not land size. So if you're buying a $600,000 property on 200,000 of land and the houses cost 400, well, you've got very little land value, you're going to get very little capital growth. If you come in closer to town and you get a unit or a villa unit or a townhouse instead, and you've got 50% land value and 50% value in the property, well, then you've got a great opportunity for capital growth. Again, they're things I've written about in my book. So they're the things you want to take into consideration. But just go back to, if your budget makes you go 30, 40, 50 kilometres out of a CBD area and you're surrounded by land that continue to be released, well, then any day of the week, you're better off buying a house in a regional area with the right growth drivers, with the right attributes. Terry's got the right reports for the right locations. And then it's knowing and understanding intimately the regional area that you're buying in, the right suburbs to buy in, and then the right attributes. And again, it's not easy. It's quite complex.
Okay. Dwayne's asking a question about Ballarat, and it's a question I guess I wonder about myself. He's asking whether Ballarat, having shown so many years of good growth, has it peaked, or is there still potential for growth there, or is it tapering off?
Oh, well, no one's got a crystal ball. I mean, if you can tell me when it's peaked, well, let me know, because I certainly don't. I never project or forecast forward because no one can possibly know what's going to happen. All I can say is that it hasn't slowed down significantly. There's still demand. There was always demand from a growth driver point of view, separate to COVID. When I first started buying in Ballarat 9 years ago, sometimes clients were getting 3 to 5% capital growth per annum, which was appropriate for the regions at that time. It's only in the last 4 to 5 years in particular that due to affordability, lack of affordability in metro areas, that prices have started to escalate. And then it's gone exponentially a little bit crazy as a result of the tree change, sea change, COVID, flea change scenario. But you've got unbelievably low vacancy rates, so great for investors, you know, just almost around 0.5%. You've got families wanting to move there because of lifestyle and affordability. You've got first home buyers buying there because they can get great bang for buck and they can commute to Melbourne if they need to. You've got the resale market of Melbourne and Geelong and locally Ballarat. So there are lots of good reasons to continue to invest. Where the top of the market is, I don't know, but you shouldn't be having short-term point of view. If you're trying to get in and get out and flip, well, yeah, you time the market. But if you're looking at a 5 to 10 year strategy, then you buy when you've got the money and you get into the market, the bank's going to give it to you, and you let the cycle do its thing, because we all know that cycles will go up and down unless there's another black swan event like another, you know, GFC or another pandemic where everything sort of shuts down the whole country. You just can't, you just have to make a calculated risk and do your research, but understand investing does have a risk attached to it. Make sure what you buy matches your risk profile, and I've written about that in my book as well. But yeah, I'm continuing to buy, and there's no reason for me not to continue to buy in regional areas.
Yeah. I tend to think that Bendigo, which is I think is a great alternative to Ballarat, is a little bit further back in the cycle, maybe a little bit more upside. It got on the growth part a little bit slower than Geelong and Ballarat, in my view. So people might consider that as an alternative with similar credentials.
Yeah, absolutely. I guess the only thing I consider, and I have bought in Bendigo for clients who've had that demand, and even just to diversify, I had one client where I bought them 3 properties in Ballarat and they were making so much money they decided to go a 4th time, and we went to Bendigo for diversification, and they've made an incredible amount of money on that one as well. So I've bought in Bendigo, but Bendigo is not a place where you commute back and forth to Melbourne. You know, you're talking about that 3-hour round trip on the road. If you want to stay in Bendigo, if you don't need to commute to Melbourne, from a resale point of view, you know, you might get people who are outpriced out of Ballarat that will go there, and you might get locals. You know, you could get some tree changes from Melbourne as well, but it just takes out the work from home commute market because you're just that bit further out.
Yep. We have a question about Warrnambool. The questioner is mentioning that I was a little bit bullish on Warrnambool a few years ago, and it's had some growth. Yeah, I do like Warrnambool, but Miriam, it's a little bit outside that sphere of influence that you talked about. It's beyond, well beyond an hour and a half from Melbourne. Yet at the same time, it's a good place in its own right. Do you have any thoughts or feelings about Warrnambool?
Look, I just bought a property for a client in Warrnambool recently. She grew up there. She knew it incredibly well. It is a 3-hour commute, more of a lifestyle location. Of course, prices have gone up. There's some beautiful seaside properties there, and the flea change, you know, tree change, sea change has driven people there. But again, when things slow down, that's going to be one of those smaller towns that isn't going to have the level of growth drivers that you're going to get in a bigger town of 80 to 100,000 people. So the same principles apply. And I'm not saying you won't make money, but it's just the percentage of money that you might make that might be significant. You know, there's a significant difference over the long term, making 5% capital growth per annum versus making 10% 10 or 15% capital growth per annum. You know, in 10, 20, 30 years, there's millions of dollars difference. And that's what people don't understand. If you've got one chance to make it right, make a good decision, that decision determines your average capital growth and then how much money and capital you'll gain in that time. And I'm always an advocate of fewer properties, but A-grade properties and a whole lot of average non-performers. Okay.
There's a couple of questions asking about the Frankston area. Perhaps you could comment on that, keeping in mind, of course, there's Frankston North and Frankston South, and they're actually quite different. Any feelings about that part of Melbourne?
Look, I have bought in Frankston for clients as well. You do have to be select where you're buying, like anywhere else. You do need to apply the principles we've spoken about. There are good pockets, there are bad pockets. You know, some places you're going to struggle to get anything decent for 600,000. So again, there's no, I don't work on a vanilla strategy for every single client. I don't do vanilla. I work according to a client's individual, you know, risk profile, goals, timeframe, budget, current asset portfolio and all the rest of it. But certainly there's great opportunity to invest in that area because you're obviously close to the whole Mornington Peninsula area. There are people moving there from a lifestyle point of view. But again, as I've said right throughout, do your research. But absolutely no reason why not to look at those areas from an investment and a home perspective.
Yeah, I'd like to touch on a point you just made about vanilla versus
tailored. Yeah.
Tailored, yes. Now, there's a number of questions in the chat box and the Q&A panel where people are asking questions like, where's the best place to buy in regional Victoria? I get a lot of questions like that. And my response, it may sound like a cop-out, but my response is, look, I can't answer that question until I know something about you. And that's the reality, isn't it? The right answer to that question could be different for 10 people could ask that question. It could be 10 different right answers depending on their circumstances.
Yeah. So I like, and this is what I don't like about shows like The Block, where they see buyer agents overpaying for property and it comes a competition as to who's going to get it and who gets to jump on, you know, the auctioneer at the end of it. And that's not what advocacy is. It's not about paying the most amount of money for a property to, you know, win it on the day. You know, I liken buyer advocacy more like financial planning, except instead of recommending managed investment schemes, it's about the right property for the individual based on their strategy, based on their goals, based on their risk profile, based on all these other factors. So it is a consultative process. You don't want to work with an advocate where you have to give them the brief. If they're calling themselves investment experts, you don't want to work with an advocate who only recommends to buy in the suburbs that they know because they used to be a selling agent they can't tell you about anywhere else. You do want to work with advocates who've got investment qualifications, who take that kind of consultative financial planning approach, because it's the difference between making a good decision and not a good one. And I can tell you any day of the week, the advocates that I'm describing that don't have those qualifications or expertise will charge you less any day of the week, but you'll pay a lot more by buying the wrong asset.
Yeah. Look, we're almost out of time. There's a lot of questions that we haven't got to. And what I would recommend is that people have questions and interest in property investment, that they follow up and make contact with you. How can people best do that?
Yeah, so I have free consultations available. I have free resources on my website. So if you just click on that resource button, you'll be able to download my 7 common mistakes guide. So if you're an investor, a home buyer or a super fund investor, have a look at that. I mentioned my best-selling book, Property Prosperity. You can buy a hard copy off my website as well under the resource section, or you can download it off Kindle for $5. I honestly encourage you to read it because it's going to cover everything we've spoken today about: risk profiles, strategies, house and land value, goals, all that sort of stuff. So by all means, download that. Best $5 you'll ever spend. If you need help buying or selling, you know, we work in Melbourne and regional markets for first home buyers who might be struggling to find the right house or apartment for their budget. We have access to off-market properties. We work with upgraders to make sure they're not wasting time trying to find the right property. We work with downsizers, again, who don't want to waste time finding the right property, so we can help them buy or sell. And of course, investors buying these high-performing investment grade properties. So there's free consultation available. So just click the contact button, fill in the free consultation. And if you want that stakeholder kit for the rental reforms, I offered that. Feel free to contact us and pop a little note in there if you're wanting access to that. Sometimes I find there are other buyer agents on these presentations. We are recruiting agency partners. So if you're an existing buyer's agent, or if you're a selling agent with significant experience looking to become a buyer's agent, feel free to reach out from that point of view as well, because we are growing our team of agency partners. And of course, if you just want to connect with me on any social media, feel free to do so. You can get access to our blogs and our updates and our Inner Circle newsletter, and stay in touch with what's going on in the Melbourne and regional markets.
Okay, thank you. Look, we're out of time. There are a lot of questions, including questions about fees, questions that can't be answered in this forum that really require a face-to-face conversation. So what I would suggest that people do is they make contact with Miriam Sandkuhler, follow up, send an email, and perhaps get a conversation going. Thank you, Miriam, for a great presentation. That was very interesting to get your thoughts on the Melbourne and regional Victorian markets, but even more so, I think the most value in today's presentation was the importance of doing your due diligence, doing good research, and having and being willing to pay for good quality advice, and being very careful about who you accept property advice from.
Fantastic. Thanks, Terry. It's been lovely to be here, and I hope everyone's found it beneficial.
Okay, let's do it again soon. Okay.
See you.
Thanks everyone for your attendance. Please follow up with Miriam if you have further questions or interest in property investment. Terry Ryder from Hotspotting signing off. Bye for now.